Eric Mwathe here. In this educational video, I'm going to be talking about how investors can use long-term monthly charts to determine the potential in a stock. And I call this ugly versus the beautiful. In other words, you want to find stocks whose chart don't look like this. And this is a monthly chart. On a long-term view, you want to avoid this type of action. The best stocks will have a history of over time having a nice run, settling down for a couple of years, having another nice run, settling down for another couple of years, and then eventually another nice run. So what you're looking for really is, when you're trying to find a good stock, is when you go back to the monthly charts, especially over a long-term period, is what you're interested is in this big move here. What you want to do is determine the size of this move. So let's say this move here saw the stock moving up. Usually I would say you want a stock to show you that it can at least double in price, so times 1 or times 2 the price, or you want a stock that can triple in price, or you also want a stock that has shown the potential to quadruple in price. So this is very important. When you go back in a stock's trading history, you want to make sure that the stock at some point has had a move that was good enough for a doubling in price, tripling in price, or quadruple, even more. So this is a requirement. The last thing you want to do is buy a stock that has never had any movement. And when I'm talking about movement, I'm going to be talking about continuous monthly movement, and I'll show you that. So you want to look at the history and see the potential or what the stock has done in the past. Secondly, you want to be able to avoid stocks that are erratic. So that's another thing we're going to discuss, is this erratic behavior tends to be not a good sign. Stocks that don't hold on to gains over many years will not hold on to gains when you buy them. So nothing is going to change. The other thing we also want to take a look at is how you can use monthly charts to determine how to get out of stocks. And this is very simple. Whenever a stock has been trading in a range and breaking out, what you want to do and wait for is, you want to wait for the highest continuous monthly move. So the highest continuous monthly move on a month to month tends to be close to the highs, and I'll discuss that in this video. Let's begin here with Apple, and this is a monthly chart going back to 2000, and you can see coming into late 90s, coming into the tech bubble bust, the stock had a nice run. Take a look at this nice steady run, and you can see before it jumps from about 20 to 36 in almost what seems like continuous action. So this here was telling investors that this thing was about to at least hit short-term resistance. Why? Because as you can see, this is the longest continuous move. This is what I was talking about. Another thing you can see here is the stock broke out. We can say broke out from this range here of about $6, $5, went on to trade as high as $36, all in a space of about 1.5 years or 2 years. That's a big move. So from 5 to 36 in 2 years. So this is a stock that is showing you potential. So as of 2000, you knew that if you ever saw a nice looking entry point for this stock down the road, then it could be a consideration for a buy. Why? Because the stock had already shown you potential to move when it was having a good time, maybe because of earnings or product release or just the market being good. So this was a sign of potential down the road. So let's fast forward, and so now we come to the same stock, Apple, 2008, and you see that previously we were looking at this period here. Now take a look at what happens, because history repeats itself. The stock eventually breaks out here in about 2003, late 2003, early 2004, and take a look at this move here. Right? How do you know that was possible? Because it had already told us previously that it can move, and this is this period here. Now this might seem like something simple, but it actually helps you determine which stocks to own out of, say, a group of 3 stocks that you are looking to own. You can go back at the history and you're going to realize that some stocks don't have good history, so why buy them? And some stocks will demonstrate the ability to move over time, and those are the stocks you want in your portfolio, because strange enough, history repeats itself in the stock market. And so here is an example of how history will repeat itself with this move here. Now fast forward to the current chart here and take a look. So we've already discussed this period here, late 90s. We've discussed this period here in the previous chart, that move there, and guess what? The stock would go on to do the same thing with this move here, or this move here, basically moving it from about, if we can call this breakout here, about 100, so the entry point here, or new all-time highs here. So either way you want to look at it, buy here or buy the high, you would have seen the stock move from 200 all the way to about 650 and above. Why? Because the stock is just repeating its history of moving. And now notice when the stock makes this high here, this is the highest continuous monthly move. You see that? That's the highest continuous monthly move based on all the data on the stock. So if you go back to the history, you see this is the highest continuous monthly move, and that's why somewhere around here it peaks. Does that make sense? I hope it does. Let's move on here to another stock. Take a look at this one here. It's just a stock that I picked when I was trying to make this video. Here's a stock that had a nice run from 97 under 5 cents all the way to $7 in a couple of years. The thing to watch here is A, the stock has shown ability of having a nice move here. All right. Secondly, notice when the stock formed this high, you saw the highest continuous monthly move. So the stock was tired somewhere around here and it needed to digest its gains. So we see two things here: highest continuous monthly move, and also the ability for the stock to spike. Notice that even subsequent breakouts like this breakout here would move the stock from about $1.25 all the way to $3.50. And that's a big move. That's a stock that more than tripled in price there. And again, another breakout on a monthly closing basis from about $2.70 all the way straight to $7. So even short term, this move here and a pause would have told you that the next move could have been big. Why? Because the stock moves higher. Now on this chart you see something interesting. Coming into this time period here in 2000, notice that this was the highest continuous monthly gain ever, and then the stock took a break. It will settle down, eventually break out above that level and have the highest continuous monthly move, and then settle down again. So potential to move, and also you see that the stock has to rest after the biggest move ever. So fast forward a couple of years later and you see that now the stock again, previously we had talked about this period here on the previous chart, but notice the stock would go on to do the same thing over time. This move here is because, take a look at this move from about breakout here, you can say, or even a breakout here, so entry here or entry here, either way, stock would move from 4 to 32, or from $7 to 32. Either way, that's a big move. Why? Because the stock has previously shown you potential to move here and here and here, and also this move here, and again this move here. Notice the stock makes that high coming into 07. Why? Because it registered the biggest monthly move ever, which is right there. Hope you can see that this was the biggest monthly move ever. Hence the stock was tired and has to rest. Now take a look at the current monthly chart. Now I gave this as a buy to subscribers. Why? Because A, we had a breakout here recently on the monthly RSI, which was consistent with this primary trend line breakout here. So that was our entry point here at about under $12. Stock's trading at 15. Why? Because I know that if the stock is going to move, it's going to have a strong move because of this history. So the history of this stock tells me it can double in price, it can quadruple in price. And also take note of this move here from about $7, straight move all the way to about $15. So it doubled in price here in 2010. Nice move. So this stock has potential to move. That's why the history of the stock tells you that given a group of stocks, this is one you want to own because it's shown you that it can move. Now let's take a look at AutoZone here. Now I like this chart because this time period here when the stock is moving, that movement there which moved the stock from a break of that monthly wedge here, so this entry point here, moved the stock from about $28 straight all the way to about $80. Now that was the highest continuous move on the stock, and it took this break. The stock didn't do much, traded in this range for a while after this mega move from here to here. So this stock is showing you potential, and the reason why I think this is important, this took place in the middle of a bear market. So this move took place when the market was in really terrible straits, and you see that nice move here. But also if you go back to the stock's history, take a look at this move from the IPO price here. The stock would go on to go from $1, $2 all the way to $20. So even here the stock had shown you that it can move. Okay, so let's fast forward to the current chart here. So this was a chart going back to 2003. Take a look at this next chart. This is a current chart now. So we were looking previously at this right there, that potential to move. Take a look at this move now. This breakout here, settle down, but the biggest move would come here, which should not be a surprise. Why? Because the stock has already shown you potential early on in its IPO days when the market was bearish here. So potential. So I'm not surprised that this one has done well, because its history is for it to do well even when markets are struggling. Let's move on to the next idea here, or just another stock. Now here's an example of a stock that you want to avoid. It's just a random stock I picked. This is stock's history going back to the 90s. Take a look at this action. This is not what you want to see. And while the market has been doing well over the last couple of years, markets trading at all-time highs, take a look at what this stock is doing. Not the most aggressive, so I would not even think of buying a stock like this, because the history of the stock is not there to tell me that it can ever do good. Take a look at another one here. So the stock, even when the stock is moving higher, for example, take a look at this breakout in this stock, moved it from about $13 as high as $20. So 13 to 20, that's nothing. That's not a big, the stock did not double in price. Stock did not quadruple in price. Stock did not even, show no potential. Another breakout took place here when the stock was strongest, moving it from about $21 all the way to just $32. That's nothing. Okay, that's nothing. Hence, take a look since 2003. This is what the stock has done. Nothing. Why? Because that's what the stock does. It does nothing, and it might seem like it's breaking out here and might be exciting, but I guarantee you, even at this current market, it's not going to do much, because it has never done anything. Now, it could go on to do great things, but the history is not there. Now take a look at this one here. Now here's a nice trending stock. Had a nice run in the 90s. Here from 5 all the way to 25. That's times 5 your money right there. Times 5. Oops. So this move here from here to here. So that's potential. And notice since then the stock would move again. Let's call a breakout here from about 20 all the way to 65. That's a good move. Not the best, but it's okay. I would consider this a decent buy, because the stock has shown me potential, even moving recently from this breakout of 55 all the way to about 100. So that's, at least you doubled your money. So you want to always look at a stock's history. Let's take a look at another one. Take a look at this one here. Stock would IPO here at about $18, and in next 2-3 months would go on as trade as high as higher 40s. So that's more than doubling your money after the IPO. So not surprising even though not the most smooth action, the stock has moved from about 48 all the way trading in the 140s. Why? Because even the IPO showed you that it can double after it came public and then settled down for a couple of years and then broke out there. And again, this is not the best chart because you always want something that has nice fluid action. Here's another example of a stock that shows potential in its history. Take a look at this move here, $7 all the way to about 12. All right, it's not a doubling, but it's okay. But take a look at this move here out of this consolidation, $11 there all the way to 24. So if this stock ever moves again like it's trying to do now, investors might want to pay attention because the stock has a history of nice continuous action right here. And you can see even this break here from these highs came when the stock recorded the highest continuous monthly gain. And since it had such a big run, it took a break, and that's why it consolidated here before this most recent breakout with an entry around there. Take a look at this one. This is Honda, and here it moved from about 750, and not, you can see this action is not fluid. It's just kind of like goes up, goes down, goes up. Eventually tag this high here before settling down. So from 750 to about $15. So you at least doubled your money here. But take a look at the next breakout. Took it from about 20 to as high as, let's call it 35. That's not the strongest stock. So even as it's trying to break out here in the current market, I personally will not buy it because the stock has not had the potential to move. And if you take a look at this chart, quite frankly, there's a lot of up and down, up and down. Take a look at all this action, up, down, up, down, up, down, up, down, up, down. Compare that to the previous chart. Take a look at this stock. When it's on a rally mode, it really takes off. Take a look at that. That's what I'm looking for. This period here shows you that this is a stock that when institutions are buying this stock, they really pile in there. Let's take a look at the next one here. Take a look at this one here, which is a current buy. Take a look at this move, this breakout from this range here. So about $2 all the way to about $6.50, $7, 2 to 6. That's what, times 3 your money. And then it settles down and breaks out above this entry point there, moving it from about $5 all the way to 14 before it breaks down. So you can see that this move here told you the next move could be big, taking it from 5 to 14. It settled down and broke out again, and you can see eventually peaking out because it had its highest monthly gain there. So take a look at the next move from $2 here all the way to about $7. Why? Because when the stock moves, it moves. And then again recently broke out here, $3 all the way to 8 before a break, 3 to 8 before a break. This is continuous movement, and now it's trying to break out again. So at least this one has shown potential in the past to move, and you want to put your money where history has shown that stocks tend to move. So this is one that I can say, using the past example of how it moves, is a good one to watch. Now here's one that is, to me, disappointing. Take a look at this move here. I mean, this is what I call indecision right here. Take a look at all this mess. And you'll notice every time it rallies, fails, rallies, fails, rallies here, fails, rallies, fails, rallies, fails. So what makes you think that the next time you own the stock, it's not gonna do one of these whoop, whoop? So the history of there is important. Watch out for stuff like that. And even here you see that the highest continuous gain, put a stop to the rally. Highest continuous monthly gain, put a stop to that rally. And even here, highest continuous monthly move, put a stop to that move there. Take a look at another one recently, and I talked about this in a previous video. Take a look at this price action. This is not what you want to see. Up, bam, up, bam, up, down, up, down. Again, recently was trying to go up, and guess what? down. So the history of the stock told you that's one you need to watch. Now the next couple of charts are going to be from the same sector. Take a look at this. So same sector, take a look. Would you rather own this stock from the same sector, or this stock from the same sector, or this one from the same sector, or this one from the same sector? Again, these charts are from the same sector. Which one would you rather own? It's quite obvious this one is very rough. Take a look at this one. It's had the history of at least having a nice run. Even that's why it's moving right now. Take a look at this one. It has a history of nice runs in the 90s, in the 2000s. Take a look at if it breaks out now, wouldn't it be a good buy? And then take a look at this one. It's done nothing over the last couple of years, last 20 years. Why would it do well for you now? So to conclude, let me just add one more chart. Take a look at this one in the current market. This is one of the best performing stocks. Why? Because it showed potential here when it moved from about $4 straight to about 15. So that's what? Times 4 your money? Times 3 your money? Yes. So it already showed you potential. That's why when it broke out here, it achieved the same thing again. Take a look at this. And of course now you can see that this is a very big move. The highest continuous monthly move could mean that it's about to take a break. But at least the history of the stock foretold this move here. Eric Moore, good luck, peace, and blessings.